Okay, so here we go. As promised, I'm going to give you the mathematical model or the mathematical proof for how and why XRP reaches at least the price of $50 by the year 2027. Now, let me say this. I'm going to go through this as fast as I can. I don't want to waste your time. I don't want to give you any fluff, anything unnecessary. But at the same time, for you to understand how XRP is going to hit this price, I don't want to go so fast through the valuation model that you get lost in the numbers and you don't even know what I'm talking about. You don't even know what numbers I'm citing or where they're coming from. So I've designed this session so that even a fifth grader can follow and understand this valuation method. And even a fifth grader will be able to understand how and why XRP is going to hit the price of $51 by 2027. All these numbers I'm going to give you, real data. Okay, a matter of fact, I have a whole bunch of links just ready to go with real data behind it. And all these numbers, right? They're not fantasy. I'm not pulling them out of thin air. You're going to see that these numbers are, in fact, grounded in reality. Now, I have in front of me, or you can see for yourself, the entire valuation model already filled out. And you can see here that the price of XRP that I expect it to reach, it should be somewhere around $51 by 2027. Meaning, as of right now, XRP is currently trading for $1.95. Okay, so that's $1.95. I've rounded it to $2, right? Upside versus $2. So the upside versus $2 is about 2,440%. That is a 2,440% return on your investment if XRP does hit this price by 2027, which I expect that it will. Now, having said all that, this is the end. This is how the valuation model is going to look at the end, right? This is the end of the valuation model. So what I'm going to do is I'm going to delete the values that I have so we can input them one by one, and you can see how all these numbers come together at the end to give us our final price. So we have to start all the way here on the left hand side of the screen. Now, this column here, this is going to be our settlement value. And again, we're aiming for the year 2027, right? So what we're looking at here first is the settlement value. Now, I know this is going to be a little weird, but I'm going to pull up my script and have it in front of me. That way you can follow. It's easier for you to follow. And obviously there's a lot of info here that I'm going to get through. And in order for me to get through this information and make sure I don't leave anything out, I have to have it in front of me. So this first half, right? This column here, the settlement value, basically all that is the total amount of money that's going to flow through the XRP ledger in 2027. Now, if you're unfamiliar with even what the XRP ledger is, I want you to think of it like this. I want you to think of it as a digital pipe. Okay, I'll say this, a digital pipeline. So the XRP ledger is a digital pipeline, and it was created by the company Ripple Labs. Okay, so that's really all you have to know for now. It's this digital pipeline, and basically a lot of water is moving through this pipeline, right? So the XRP ledger is our pipeline, and there's a lot of water flowing through the pipe. Payments are water. Stablecoin transfers are water. Tokenized treasury bills maturing, right? That's water. ETF creation, that's water. Loan being repaid, that's water. All of this is happening at Ripple's XRPL pipeline. Let's just call it that. And all of this, basically all of this water combined, right, from payments, stable coins, real world assets, ETFs and institutional products, lending and DeFi, residual settlement, other, etc. All of this is going to give us at the end one number, which is how much value is moved through XRPL in a year, through XRP's pipeline, or excuse me, through Ripple Labs' pipeline. Now, this number is very critical because the more value that flows through the XRP ledger, the more value that flows through it, the more valuable XRP will become. Now, we'll see that a little later. I don't want to get too ahead of myself. But Before we get started, some of you might not even know about the XRP ledger. If you invest in XRP, you should keep up with XRP, the XRP ledger. Luckily for us, since obviously, like I said earlier, Ripple Labs, right, makes the XRP, or excuse me, made the XRP ledger. They have this quarterly report where they report on the state of the ledger, so we can see how much water, right, using our analogy, is flowing through the system, how much of it has increased quarter over quarter, right? Because these are quarterly reports. So having said that, we're going to start off with the first layer of, or the first flow of water. That's payments, right? And this one is simple and it's very foundational. And why I say that, because in Q3, so we're going to go to Q3, we're going to go to the state of the ledger. And so in Q3, right, the XRP ledger handled about 1.8 million transactions per day. So again, you can pull up these numbers, right? So we're going to type in 1.8. And so you can see here in Q3, multiple key network metrics increased. Average daily transactions increased 8.9% quarter over quarter, from 1.6 million to 1.8. Okay, so they went up to 1.8 in Q3. Matter of fact, you can see here, each of the last 5 quarters, payment and offer create have represented the vast majority of transactions on the ledger. In other words, payments represent the majority of this activity, of this water flow. Okay, so payments is what we're looking at here. Now, globally, we have to look at where cross-border payments, I mentioned this in my last video, right? But XRP, right, the token XRP, was really made to transfer money, to solve the problem for banks of international money transfers, of moving money from one country to another without having to deal with the SWIFT system. Now, how big is this market going to be in 2027? Well, globally, cross-border payments are projected to be at 250 trillion in cross-border flows by 2027. You can look this up. I've already done it for you on Google AI. You can see here the total value of cross-border payments is expected to increase 250 trillion by 2027. Okay, 250 trillion. Look at where it was at in 2017, 150 trillion. That's a massive increase. Okay, so let's just assume, right, that the XRP ledger, this pipeline, is going to capture maybe, let's say, 1.8% of this market. I think that's a conservative amount, right? It's a modest amount, given Ripple's potential for new banking corridors. But anyways, this amounts to 4.5 trillion in annual payment settlement if XRPL captures even 1.8% of this $250 trillion market by 2027. Now, this is going to be our first major stream of water through the XRPL pipeline. So we're going to put here 4.5, and this is all in trillions, right? You can see here the settlement values in trillions. So this is going to be our first stream of water, right? So I have here like this digital image of the water, right? So this is our first water flow through the pipeline. And it's fast, right? It's constant, it's high velocity movement. This is exactly what XRPL was built for. So now we're going to look at layer 2. So layer 2 is stablecoins. So stablecoins, a lot of people might not even know what stablecoins are, okay? But stablecoins are basically digital dollars, okay? They live on the blockchain, and unlike the cash in your wallet, right, they don't sit still. Stablecoins are not designed to sit still. You can think about this like a dollar bill that gets used to, for example, buy lunch, right? When you use that money to buy your lunch, the restaurant might use it to pay their supplier. Then the supplier will use it to pay their employee. And that same dollar might move, dozens of times per year. Stablecoins behave like that. They move a lot. They're designed to move a lot. And the reason they do that, or they're designed for that, is because it doesn't function like a regular bank dollar, right? Because the money in your bank is stuck behind, you can think of it like a gate, right? It can't move on the weekends. Say you want to transfer your money from, I don't know, JP Morgan Chase to, I don't know, some other bank that you have, and you want to make the transfer on Saturday. Well, guess what? That transfer is not going to happen until Monday or Tuesday, right? It's like locked behind a gate. It can't be used. That money can't be used inside crypto apps. It can't flow directly through the XRPL pipeline. But when that dollar becomes a stable coin, that gate is gone, because now that dollar can move across borders in seconds. It's actually used. Stable coins are actually used for cross-border flows. They can plug into XRPL apps. They can be used in DeFi, lending, tokenization. They can settle automatically through smart contracts, and they operate 24/7 worldwide. So stable coins are like a very fast cousin of the dollar. You can think of them kind of like high velocity dollars. I don't know. That's kind of the analogy that I'm drawing, or the picture that I'm drawing. So what am I trying to say? What I'm trying to say by all this is there is a lot of stablecoin activity happening in our XRPL pipeline. There's a lot of this activity going on. And this is one of the biggest streams of water because of the constant movement that stablecoins have, right? This constant movement is creating huge settlement demand. Now, I want to draw something for you. I want to give you some numbers. So in Q3, Ripple's RLUSD. So let's go to the state of the ledger, right? So we'll go to RLUSD, and you can see here, Ripple's USD pegged stablecoin. So Ripple Labs has its own stablecoin. That's their RLUSD. Closed Q3 with the market cap of 88.8 million. This is on the XRPL ledger, by the way, not overall, but on the XRPL, yeah, you can see it here. It says on the XRPL. This was up 34.7% quarter over quarter. It's the network's largest stablecoin. Now, if you actually go to CoinMarketCap and you look for a Ripple USD, let me refresh this because I don't know if it's refreshed or not. So you can see here, Ripple USD, they are where do they rank? 1, 2, 3, 4, 5, 6, 7, 8. So they're ranked eighth in terms of market cap for all stablecoins. So it's the eighth place, basically. So having said that, right, Ripple Labs, or I should say the RLUSD stablecoin, just crossed $1 billion in market cap. It just hit that market cap. Now, interestingly enough, this $1 billion market cap is split. 819 million is on Ethereum. That's on the Ethereum layer, right? And XRPL in our so-called pipeline, there's $203 million worth of RLUSD. So basically, all that's to say that you have in this quarterly report, it says 88 million, but as of now, it's actually 203. So you can see how fast this market cap is growing within the XRPL ledger, right? There's more of the stablecoin being used. Stablecoin activity, high growth. That's a lot of movement. That's a lot of water flow. Okay, so going back to my script, right? So you can see $1 billion across the XRP ledger and Ethereum by early November 2025. I just showed you that from this article from AOL. So that's approximately 200 million on the XRPL ledger, or the XRP ledger. So globally, where do analysts expect the stablecoin market to be? So you can see, I typed here in Google JP Morgan stablecoin market size for stablecoins in 2027. So you can see here 1.4 trillion. Okay, so JP Morgan says 1.4 trillion. There are different estimates. I don't want to pull them all up, but some say up to 2 trillion by 2028 in more bullish scenarios. Several say up to 4 trillion by 2030. We can say somewhere around 1.4 to 2 trillion by 2027, 2028, somewhere around that number. And so because this market is growing fast, about 20 to 40% per year, using 2 trillion for 2027 is like a mid-range, kind of like a low. It's like mid to upper mid-range. Let's just say that. But now, let's just assume that XRPL captures 2 to 3% of this market. 2 to 3% of a $2 trillion market, that's $50 billion in stablecoins sitting on the XRP ledger. Okay, now, these digital dollars, like I say, they move very fast. They're designed to move quickly. So if they're moving around 40 to 80 times per year, so you can do the math, right? That's about, let's say, 1.5 trillion in annual settlement flow. So that's not talking about market cap, okay? Don't get it confused. Don't get market cap confused with settlement flow. So why do I say 1.5 trillion? Because stablecoins move when businesses pay each other company swap currencies, investments pay interest, tokenized T-bills roll over, corporate treasuries rebalance. Every one of these actions sends more water through that XRPL pipeline, right? So if we have 1.5 trillion in annual settlement flow, 1.5 trillion, let's compare this to a network like Ethereum and Tron, right? Institutional flows multiply stablecoin movement by 2 to 4 times. So we can actually look that up. So as of late 2025, recent reporting indicates that institutional flows on Ethereum do multiply stablecoin movement by several times. And while Tron has significant volume of stablecoin activity, blah, 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 it doesn't necessarily multiply flows in the same way. So it depends on the network we're talking about. However, let's apply a conservative version of that multiplier. If we have stablecoin movement at 2 to 4 times, we'll apply one of 3.5 to our $1.5 trillion annual settlement flow that we have above, that we got from this 2 to 3% share of a $2 trillion market. And essentially we get the number 5.5 trillion. I hope I'm not going too fast, and I hope I'm not losing any of you. But basically that's 5.5. All you got to know is I'm approximating 5.5 trillion in annual stablecoin settlement on the XRP ledger by 2027. So we're going to put 5.5. Okay, so far we have $10 trillion in settlement value. Let's move on to layer 3, real world assets. So RWAs. So what are RWAs? So real world assets are things like US Treasury bills, right? Commercial paper, money market funds, tokenized real estate, tokenized credit products. So in Q3, you can actually look up the Q3 report. Let's type RWA into the Q3 report. So we can see the XRPL closed Q3 with an all-time high RWA market cap of 364.2 million. So it's up 215% quarter over quarter. Now, I do not want to underestimate the size of RWAs. RWAs are so important for the XRP ledger. Okay. But anyhow, what is the market cap for RWAs? You'll see why in a second. But if you look, type into Google, right? RWA market cap forecast 2030. Analysts project that tokenization could escalate into a multi-trillion-dollar market over the next decade. Estimates ranging from $16 trillion by 2030 up to 30 trillion under more aggressive scenarios. That's a huge market. I mean, we're talking about 30 trillion potential. So market cap forecasts, like you just saw, right? Some bullish scenarios have 10 plus, some say 20 to 30. But here's the key insight, and this is what you need to know about RWAs. RWAs settle constantly, right? And that's what we're looking at. We're looking at settlement value. Since they settle constantly, they don't sit still. Let me explain to you. Let me go one by one. So for example, let's take treasury bills, right? Let's take a 3-month T-bill. A 3-month treasury bill matures every 13 weeks. It expires, pays out. That's 4 times a year it's reinvesting. Each of those cycles for treasury bills, each maturing cycle, right, pushes water through the XRPL pipeline. Take commercial paper. 30-day loans, right? These are 30-day loans big companies use for short-term cash needs. 30 days later, it has to be paid back. That's another settlement. Then they borrow again. That's another settlement, right? So a company that has, say, a $10 million loan, that could be 12 flows per year. That is a lot of settlement activity, right? So you can see how it's multiplying these numbers. Real estate tokens, you can think of them as like digital slices, right, of real buildings. Every time properties generate rent, that's monthly cash flow. Money's moving now through the XRP pipeline, or XRPL pipeline. Loans, I think everybody gets that, right? Monthly principal and interest payments, these create recurring settlement flow. Okay, so let's just suppose, right, if the XRP ledger hosts even 1 to 2 trillion in RWAs by 2027, remember, the market cap, right, could be somewhere between 10 to 20 to 30. We don't know. It's an estimate, right? But let's say we host at least 1 to 2 trillion in RWAs by 2027. Remember, there's a lot of constant rollovers, treasury bills, commercial paper, cash flow cycles, right? They generate. So we have, they generate roughly 5 to 10 trillion in annual RWA settlement. However, since we don't know the exact number, we're going to choose a conservative midpoint, and we're going to say 6.5 trillion from RWAs. And that's simply because, if we have, let's say, 1 trillion, right? And the constant cash flows and rollovers are going to create about 5 trillion in settlement activity. We're going to, and again, if it's 2 trillion, it's going to be around 10. We're just going to assume 6.5 because that's, in the lower mid range. And this is why RWAs are so important, because if you look at our settlement activity so far, RWAs constitute what I believe is the largest estimate because it has the largest market cap size out of all of these other streams of water. So we have it in our visual metaphor in our stream of water for our pipeline. Okay, let's move on to layer 4, which is ETFs and institutional products. So let's make this really simple, but ETFs are very important. You'll see why later, but let's make this really simple, right? What is an ETF? Well, an ETF is basically a big basket of assets, right? Like stocks or crypto that people can buy on the stock market. For example, if you buy an XRP ETF, that institution is going to have to hold XRP. You're buying a basket of their assets. That institution's holding XRP. Okay, so you can think of it as like a giant container that's holding XRP for millions of investors. People buy shares of the container, and now the ETF company is buying the actual XRP that goes inside it. That XRP is not moving. Now let's go back to our pipe analogy, right? If ETFs, you can think of them as more of like trucks. So the best way to think of each truck is like an event. I know it's a bit weird of a visual, but bear with me because it's the only one I could really think of, right? But the ETFs, they don't bring water themselves, right? But they make a lot of water move when they show up, right? Because it's an event, it's a settlement activity, right? For example, every time an ETF company creates new ETF shares, that's a truck, right? Because now they have to buy more XRP. When they redeem shares, right, they're selling because now they have to sell XRP because their investors are selling their ETFs, right? Buy XRP to match inflows, that's another truck. Sells XRP when money pulls out, that's another truck. Hedges their positions, that's another truck. Rebalances portfolios, that's another truck. So all of these are causing big bursts of water, right? It's causing big bursts of water through our pipeline. And so these trucks are arriving and leaving. They don't represent necessarily new money, but they do represent huge movements of value inside the pipeline. So you can look this up, right? Bitcoin ETFs currently generate around 800 billion to 1 trillion per year in trading and settlement activity, right? Now here's the key. XRP is barely entering its ETF phase. Matter of fact, Canary, XRPC, aka XRPC. You can look up XRPC, but XRPC just launched. This is the first spot ETF, the first XRP spot ETF on the market, the very first one, right? Franklin Templeton's launches next. I believe Franklin Templeton's might have launched already, or I might be mistaken about that. Bitwise, right? Bitwise, you can see here, Bitwise XRP ETF sees massive first day of launch with nearly 22 million in trading activity. This just happened, right? Bitwise, Franklin Templeton. Franklin Templeton's XRP ETF will debut next week, right? All these ETFs for XRP are barely taking off, right? They're barely taking off. We have more ETFs coming up. That's more institutions buying XRP for their investors to then buy baskets of, right? So more ETFs. What these ETFs do is that they bring more trucks to the pipeline, and essentially more trucks now are creating more water movement, and this is creating huge steady settlement flow, and we don't need to make extreme assumptions, right? So let's take a conservative approach. If XRP ETFs do even 20 to 30% of Bitcoin's ETF activity, right? 800 billion to 1 trillion per year. Let's say XRP ETFs do 20 to 30% of that. We include the extra water movement, right? from hedging, arbitrage, rebalancing, which multiplies. Remember, it's going to multiply the activity by 3 to 5 times. You end up with a realistic range of somewhere around 0.6 to 1.5 trillion in settlement demand. And for the model, then we're going to just pick a clean midpoint. We're going to say 1 trillion from ETFs and institutional products. So $1 trillion worth. So far we have $17.5 trillion worth of settlement activity or water flowing through our pipeline. Okay, so next we have lending and DeFi. Now, lending is very easy. I think this is probably one of the easiest sections to go over because we know what lending is, right? It's very easy. Someone borrows money, that's water flowing out of the pipeline. Repaying the loan, that's water flowing back in. Interest is paid each month. Water flows. Collateral gets moved. Water flows again. A loan gets liquidated. That's a huge splash of water. Now, here's the key idea. We have to look at the lending activity that already exists today on other blockchains. As a matter of fact, I already did the research. So you can see here, right? Decentralized finance lending platforms such as Aave, MarketDAO, and Compound facilitate a massive amount of financial activity on the Ethereum blockchain. Look at this. Sometimes reaching hundreds of billions to trillions of dollars per year in loan originations and repayments during peak periods. Okay, this is just on Ethereum. Hundreds of billions to trillions of dollars per year. Okay, so platforms, so we're looking at the kind of activity, right? This kind of activity, platforms like Aave, MarketDAO, Compound, tokenized treasury lending, short-term credit markets, collateralized loans, stable loan credit lines, DeFi liquidations, lending activity. All of these platforms on the Ethereum network are already handling hundreds of billions to trillions of dollars per year, just like I just showed you, right? XRP, the ledger, is built for this type of high-speed, low-fee financial activity. So let's just say XRPL's own lending ecosystem, right? It grows to a few hundred billion in assets. It turns over monthly or quarterly. We include collateral adjustments, liquidations, right? A modest credit market on the XRP ledger could easily generate 2 to 3 trillion in annual settlement flow, given that it's already, we see on the Ethereum blockchain, it's already in the hundreds of billions to trillions per year, right? So if we assume that the XRPL or the XRP ledger could generate somewhere between 2 to 3 trillion in annual settlement flow, let's stay conservative. Let's pick a number like 2.5 trillion from lending and DeFi. So we're going to put here 2.5 trillion. Okay, so the last part, which is everything else. Now, this is the final layer, right? All the small streams, the smaller streams of water. Each one of these could be its own explanation. I lumped them into one category because this video would have gone on forever if I would have done that. But each one individually, though, is tiny compared to payments, stablecoins, or RWAs. But together they create a surprising amount of extra settlement flow. So we can include things like NFTs. You've probably heard of NFTs. And again, I could make a whole segment on that. I'm not going to get into that. Tokenized private assets, sidechain activity, over-the-counter trades, exchange settlement, corporate cash management, tokenized bank deposits. Each of these categories is very small, but all of them just add more water to the pipeline. Now, I should have probably made this distinction earlier. I think it would have helped. But there's a difference between a total market cap and settlement flow, right? The money, the thing we're looking at here is settlement value. Okay, we're looking at settlement value. This is what we're looking at right here, settlement flow. This is the amount of water that actually moves through the pipe. We're not looking at the market cap, which is the assets sitting on a blockchain like a tank of water, right? So, like for example, it could be a concrete example. If there's $1 trillion worth of treasury bills sitting on a blockchain, each bill matures, say, 4 times a year, that creates 4 trillion of settlement flow. So you see, well, $1 trillion market cap could create settlement flow of 4 trillion, even though it has only 1 trillion on the chain. So small tank, big movement, right? Because again, it's the movement that we're considering. That's how layer 6 works. So what does the research show? As a matter of fact, you could go to here, right? So a report by Citi, Money, Tokens, and Games. This is the bank. Forecasts that tokenized digital securities market could reach between 4 trillion and 5 trillion by 2030. McKinsey says 4 trillion. Deloitte says 4 trillion by 2035. Oh, by the way, McKinsey says 4 trillion, 2 trillion by 2030. Bullish scenario, 4 trillion by 2030. Okay, so we can see all these reports, right? Citi's projections, McKinsey's projections, Deloitte's projections. I already put them on the Word doc. So blockchains are going to take a slice of this tokenization wave. XRPL, since it's one of the competing blockchains, is going to capture a slice of that slice. And just having a slice of that slice will still generate about 500 billion to about 1 trillion in annual settlement flow. So again, these numbers are coming, I just showed you, right? They're coming from top banks and consulting firms. So the final input we're going to put is 1 trillion in everything else, right? This falls under the everything else in our categories. So now we have the settlement value. Okay, so what does this mean? What does this mean? We have $21 trillion of settlement value. This means that we have $21 trillion worth of water flow going through this pipeline. And that's really all you got to know, is that by the year 2027, I am estimating, based on the current data, the current numbers, the current momentum, where the XRP ledger is currently, and based off of market cap, the movements of these market caps, all of this in sum is telling us that the settlement value is going to be $21 trillion by 2027. Okay, so let's go back. So now this is where the analogy is going to grow, right? If the ledger can realistically move $21 trillion worth of value in 2027, there's one concept that we need to understand, right? How thick does this pipeline need to be to handle this much water? Because to handle this much water, right? You could let me say this. Keep in mind, right? XRPL is a pipeline. All this economic activity is the water flowing through the pipe. XRP is now going to represent the physical material that this pipeline is made of. Okay, so the XRP, we'll call it the pipe material, right? It's not just a big solid tube. It's made up, each XRP it consists of millions of pieces that put the pipeline together, right? Could be even metal rings, right? I put here, could be even modular metal rings that connect together. Now, let's go back to our analogy, right? If the water flow for our pipe is small, the pipe can be thin. And this is why XRP was trading for cents, years ago. Even last year was trading for like 50 cents or less, right? And the reason why is because the XRP ledger wasn't settling trillions of dollars. There wasn't much pressure on the network. So if there's not a lot of water flow, you could get away with having a thin pipe, right? So a small market cap for XRP is fine. However, if we're saying the pipeline has to have $21 trillion worth, or is estimated to have $21 trillion worth of water flowing through that pipe, just common sense is going to tell you this pipe has to be thicker. So imagine $21 trillion worth of water flowing through the XRPL every year. That's a lot of pressure. So to survive that pressure, the pipeline now has to be built with far more pipe material. And because you need more material for the pipe, this makes the pipe thicker. That thickness is represented by the market cap. And the market cap, if you have a higher market cap, you have a higher XRP price. I hope this makes sense now. So thin pipe, don't really need a thin water flow, you don't really need a thick pipe. But large water flow, now you need a very thick pipe, which means now you need a large market cap, which means XRP is going to jump up in price. Simple cause and effect. Now, big chunks of the pipe, right? Now, this is what I was saying earlier, right? ETFs are extremely important. Why? Because whenever institutions dish out ETFs, and this is why I say ETFs are huge for XRP, right? Because when institutions now start giving, putting on the market their XRP ETFs, they have to hold XRP because their investors are buying baskets of XRP assets. They need to have XRP held in reserves. That's XRP that doesn't move. That XRP is being held by banks, right? It's being held by brokerages. So ETFs, they lock up the XRP. Banks, they hold XRP. RWAs, biggest market, right? If you look at our biggest set of water flow, it's RWAs. And if you look at RWAs, they're locking up XRP as collateral, making them doubly important. Lending protocols, they lock XRP in vaults. I'm sure some of you right now watching me are long-term holders. You're part of that, right? You're holding your XRP. You don't want to let it go. Each one of these, right, is like taking pieces of the pipe material and bolting them permanently into the pipe, right? Now they're bolted, and these pieces now, they can't move. They're not flexible. They can't shift around. They can't reinforce other sections of the pipeline. They're stuck. And this is where we get the concept now of velocity. That's the second input, velocity. So the lower the velocity, the fewer pieces that there are of XRP circulating, because there's more being held. The more people hold on, the lower the velocity. The more people freely, get rid of it or trade it or use it to do things, the higher the velocity. So when I say, for example, less of the XRP pipe can move around to support new flows, that literally means that there's fewer pieces of the pipe available to strengthen the pipeline. So what happens? Now, let's put it together. When the velocity drops, the remaining XRP that are circulating has to become more valuable. Why? Because simple, right? Let me minimize this a bit. There's a huge amount of water flow, $21 trillion worth of water flow. And a lot of the pieces, if it's a low velocity coin, many of the pieces are being bolted down into the pipeline. So the remaining pieces that are available to reinforce the pipe shrink. And so that means that each of the remaining pieces has to become thicker. And remember, the thickness represents the value, because the higher the market cap, the higher the value. So the question is now, I think you get the analogy now. The question is, what's the velocity of XRP? What number do we put? Well, we have to compare XRP to other assets, right? So Bitcoin's velocity is about 1 and 2. I think, this is just my opinion, I think it might go up to 3 or 4. I say that, I might be wrong about this. Okay, I argued this in my Bitcoin article. I don't want to get into it, but let's just assume right now, Bitcoin, its velocity is 1 and 2, somewhere between 1 to 2. Why is Bitcoin's velocity so low? The reason why Bitcoin's velocity is so low is because people don't want to let go of their Bitcoin, right? We hear the funny story of the guy who paid, I think it was 10,000 Bitcoin for some pizza back in like 2009 or 2010. And people laugh, right? They're like, oh my God, you got rid of 10,000 Bitcoin for a pizza, right? Why? Because you know that Bitcoin's value is going to continue to increase. So you don't want to let it go. You don't do that with the dollar. If you say, I paid $20 for a pizza 10 years ago, no one's going to care, right? Everyone's going to say, oh, was the pizza good? Like, did you enjoy the pizza? Right? Nobody cares, because the value of the dollar decreases over time. But the value of a Bitcoin increases, right? One's value, the US dollar's value, is lost through inflation, right? So anyhow, all I'm trying to say is this: because Bitcoin's values constantly goes up, more people are holding on to it. Stablecoins are different, right? Stablecoins do dozens of turns per year. I said earlier, right, that the stablecoins were designed for kind of rapid kind of trading transferring money or transferring from one currency to another, right? They often have the velocity of about 40 to 80. Now, you can look this up. I already put it here, Google AI overview. Stablecoins exhibit a high velocity with estimates of 40 to 80 turns per year. Okay, so I've already put that here. Again, all these numbers are backed up by real data. So 40 to 80 based on today's data. They're considered to be the fastest water in crypto, which is why, again, they have such a high settlement value in our pipeline because of their constant movement. It's one of the best kinds of water flows you can have, let's say, inside the XRP pipeline. And they're used constantly for payments, remittances, and exchange. Ethereum, I just wrote an article on Ethereum. I pegged Ethereum's velocity at around 10. I've read articles that they say it's around 2. I haven't been able to find that data. So I just put here, for the sake of, saying that they might be right, I might be wrong, somewhere between 2 to 10. I'm not quite sure what Ethereum's velocity is, to be honest with you. I said it was 10. I used in my valuation model 10. So we'll say somewhere between 2 to 10. But what is Ethereum? I don't want to say Ethereum because that'd be incorrect for me to say. But what is ETH used for? ETH is the proper name of the token, right? It's used for collateral, staking, gas, DeFi, these kinds of things. Now, what is XRP? It's not like Bitcoin. It's not like digital gold or monetary infrastructure, like to the extent that Bitcoin is, right? It's part payment token. It's kind of like a stable coin because stable coins can be used for cross-border flows. So can XRP, right? That's XRP's primary design. It's part high-speed settlement asset. However, it's part collateral. So a lot of people hold XRP. It's not designed like a stable coin, right? It's more people are holding on to it. It's part reserve asset, just like Bitcoin. It's part ETF held now officially, right? And this makes it more like Ethereum and Bitcoin. As a matter of fact, this part right here, these two are kind of the future. It's kind of, I want to say it's more like these. I don't know. No, you know what? Let me scratch that thought because it really is kind of a hybrid of all these things. But if I were to assign percentages, I think going into the future, these are going to play major roles. And what this does is if there's a lot of XRP ETFs going into the future, which there will be, a lot of that XRP, like I said earlier, is going to be locked in these institutions, just like it is for Bitcoin and Ethereum. They don't move, and that creates a lower velocity. But it's also part treasury and liquidity rail. So it's not as fast as stablecoins, nowhere near as fast as stablecoins, but it's not as slow as Bitcoin. And it may arguably be somewhere around the same velocity as Ethereum. I think it might be lowering its velocity the more it's becoming more valued by banks and the more it's being held on to as, ETF in baskets of ETFs. So I'm going to assign it somewhere between 5 to 7, a velocity of 5 to 7. That's the same velocity that I gave in my Seeking Alpha article. I believe I gave it a 6. But in this, since I'm going to label it as an institutional settlement token, I'm going to give it a final velocity of 5. And we're going to use this velocity of 5. Now, you can see here that the market cap is already done for us, right? Because the equation for the Excel sheet is B2 right here, 21 divided by C2, that's 5. So when you divide $21 trillion by the number 5, you literally get 4.20 trillion, right? That's the result, and that's what we get here, the market cap. So let's go to the market cap, right? So the market cap is just basically telling us how much pipe material this XRPL needs, right? Because we've already established that the pipeline is carrying $21 trillion worth of value in 2027, but the pipe material is only being used 5 times a year, which means how much total pipe material does the system need to safely support a flow of 21 trillion? And based off these amounts, 21 trillion of annual settlement and a velocity of 5, the total amount of pipe that's required to safely, you don't want to have massive fluctuations in this ledger if there's no XRP available to make transactions, right? From, say, I don't know, just give a simple example, using the XRP ledger to transfer money from one country to another. but the network is unstable and now there's massive price fluctuations. You don't want to use that network. So how much do you need to keep it stable? And to have a stable system, this needs a pipe of about, or let's just say a total market cap to hold the pipeline together in a stable fashion of about $4.20 trillion. Okay, so $4.20 trillion is our market cap. And now we come to the 2027 supply, which is actually, to be honest, this is probably the easiest input because we don't have to really make any hardcore estimations. The question is, how much XRP will be in circulating supply by 2027? This is one of the most predictable parts of the model. So let me actually go to CoinMarketCap to show you. Let me refresh this page. So here we go. You can see right here, XRP, the circulating supply. You can see right here, the max supply is 100 billion XRP. It's not truly 100 billion because some have been burnt out of existence. Whenever XRP is used, I've already said this before. Let's say one bank transfers money from one country to another in 5 seconds using XRP through the XRP ledger, right? A little bit of XRP is burned permanently out of the system. It can never be recovered. But I think the rate is like something like 0.0002 or 0.00001. I don't know the exact number, but it's something like that. So it can never truly be 100 billion. It's that number is forever gone. But either way, I don't want to geek out on this. But the total max supply, you can see the circulating supply right now is 60.25 billion XRP. So how do we know what the number is going to be in 2027? Well, it's very easy actually, because for XRP, right, there's no mining XRP. It's not like Bitcoin, right? The total XRP created in 2012 was 100 billion, and that's it, right? Ripple Labs does not have the code to create more XRP. So the total pipe material is never going to exceed 100 billion XRP. Just like I said, right? It can never even reach that number. Ripple's escrow is creating a drip of XRP. What does that mean? It means that starting in 2017, right? This was in 2017, so it's kind of old, but Ripple locked 55 billion XRP into escrow. From this 1 billion that's unlocked every month, only about 200 to 300 million is used internally. So that's about 200, 300 million is used internally. That's ODL operations, market support, liquidity balancing. All you got to really know is that most of this XRP never hits the public market, right? It just kind of moves around Ripple's system. So really only a small amount becomes real circulating supply. And the other 700 to 800 million is sent back into escrow. What does that mean? So even though there's about 200 or 300 million XRP that's coming out every month, it's not necessarily net new supply, right? Because a lot of it is just, like I said earlier, it moves around Ripple's system. So the real number that increases public circulating supply is somewhere around 200 to 300 million XRP per quarter, not per month. And so this matches Ripple's market reports, Glassnode, Masari, CoinMarketCap, supply methodology, and so forth. So the current supply as of late 2025, just as you saw, is 60.25 billion XRP. And so over the past several years, XRP's true net increase has been about 1 to 1.4 billion XRP per year. So over 2026 and 2027, the realistic increase is about somewhere between 2 to 2.8 billion XRP total. And so if we just apply this, right, to 2027, we're expected to have a supply of somewhere around 62 to 63 billion XRP. From today's 60.25 billion. Remember, that's only about 12 months from now, really, or 14 months. I mean, if you want to be very specific with it, because it's November 2025. I mean, really 13 months, right? But anyways, that's about 1 to 1.4 billion per year. So we're going to assume on the lower end, right? So we're going to say 62 billion XRP because it's conservative. This is data backed. It's consistent with XRP's yearly escrow behavior. So we're going to put a total supply of 62. Now, I can't put 62 outright because remember the settlement value is in trillions. The market cap is in trillions. So the supply therefore has to be this is in the billions, right? 62 billion. I can't just put 62 because then I'd be assuming that it's also within the trillions. So we're going to put 0.062. And that gives us an implied future price of $68. But hold your horses. And some of you are saying, oh, well, don't you mean that XRP is going to be $68 a pop? No, not necessarily. And here's why. My computer just, there we go. Okay, so we know, right, the market cap. Let me just go back and just say a couple things briefly before I get to the implied future price. We know how thick the price, how thick the pipeline needs to be. That's the market cap. Okay, that's the thickness of the pipe. And we know how much pipe material actually exists. That's the XRP supply of 62 billion. So the last step is how much is each piece of the pipe material worth? The price of one XRP. So if we have the entire pipeline stacked in a big pile, you would take all of that pipe material, all 62 billion XRP, pile it on the ground, and we divide it into the pipe material, which is 4.2 trillion. If we just divide the number of pieces by the market cap, we get a value of 68. And that's how we get the value of 68 here, right? We're just simply dividing the number of pieces that are available to support the pipeline divided by the total value of the pipeline itself. And we get the price per piece of the pipe. And that's XRP. Now, this is the same formula, just very familiar to many of you, right? Because this is the same formula used in stocks, right? You have the market cap, which is the total value of a company, and the shares outstanding, that's the supply of shares for the company. And you simply divide the market cap by the shares and you get the price per share, right? That's how you get a price per share for a company. For XRP, we're doing the same thing. We're just dividing the market cap by the supply and we're getting the price per XRP. Same exact formula. So now that we've found the implied future price, which is $68 per XRP, we need to make one final adjustment, and that's the discount. We cannot do a professional full grade valuation on a crypto asset or any stock for that matter without providing a discount rate. Now, let me just say this. Let me just preface this really fast. Whenever you do a valuation on a stock, suppose you do a discounted cash flow, which is you're trying to figure out you see the market price. You see, for example, Google, I don't want to say Google, Alphabet, right? Alphabet is trading for a certain price, right? So let's just see Alphabet stock price. And you see it's $299 at the moment. You wonder, how much is that stock really worth, right? Because we see that the market is paying $299, but is that what the stock is really worth? You can do a valuation methodology called the discounted cash flow, and you try to figure out what is the true intrinsic worth of Google based on the cash the company is making. However, when you apply this, you always have to apply a discount rate. The riskier the company is to invest in, a company like Alphabet, McDonald's, probably going to give you a discount rate of about 7, right? So you're discounting those future cash flows and you're saying, I'm going to assign a 7% discount because, Alphabet might have a bad year. McDonald's might have a bad year. So I'm going to account for the potential that this company might not perform that well going into the future, and my expectations for the company's cash might not be met. That's all a discount is. You're just simply saying that, assuming all these risk factors going for the company, I'm going to discount its value by X amount. For a stable company, that's 7. For a riskier company, it's probably going to be a little higher. Now, what about crypto? It's different. It's a different industry. Crypto is a different beast. So to make it even a little easier, right? If we assume XRP is going to be $68 in 2027, right? Taking that analogy or taking all that explanation about discounts I just said, in the real world, right? Not all the water is going to flow through on day one. Some water is going to come in later. Someone's going to come in next year, right? So for example, real world asset settlement value might not be 6.5. It could be 4.5, right? But Stablecoins might be 6.5. Lending and DeFi might be 3.5, right? These numbers, they could shift. Some of them might not even materialize. So we're not going to assume that final amount or the final thickness of the pipe right away, right? We have to assume, and this is the bottom line, we have to assume a slightly smaller pipe for now to account for all the risk involved in our assumptions. And this is the same exact way you would do it for a company. Cash flow, you would do it for a crypto asset, right? We're doing it for our streams of water because there's no cash flow as like traditional companies like Alphabet or McDonald's, like I mentioned previously. So for a discount for cryptocurrency, they usually run between 20 to 30%. And I'm going to apply a 25% discount, which is right in the middle. And if we apply a 25% discount, there we go. The discounted value from 68, if we apply a 20% discount, is $16.94, giving us a discounted price for XRP's value in 2027 of $51, meaning that the upside from here versus XRP's price right now, it's rough $2, approximate $2 is 2,440%. 2,440%. I have never found a company with this much potential upside. I don't want to say company, but crypto asset, whatever you want to call it. I've done these valuations for Bitcoin, Ethereum, XRP, other companies. This is the best one I have found. So I hope you learned something. I hope this is very useful. And I hope that you have confidence in your investment. Always do your own due diligence. This doesn't constitute, obviously, financial advice, but I do strongly believe that this is going to be the price of XRP going into 2027. That's it for now. Have a good day. God bless.